All right, about to get this stream rolling. Everything looking good over here. One more moment. And I believe we are live. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. on Sunday, August 8th, 2021, Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So we're actually going to get started a little different today. Pretty much have our standard way of just kind of jumping into these assets. But today we are going to be taking a look at one of my new creations. So for everyone in the trade group, this specifically goes out to you. I have turned the course strategy into an indicator, as I kind of let you guys know. And here it is previewed. I did two versions of it, version 1 and version 2. It is called the TJD Master, and that is a moving average strategy indicator. So I basically just kind of turned all that into Master, MA from moving average, ST for strategy, and ER, the last two letters from indicator. So yeah, it's the TJD Master version 1 and version 2, and it essentially just does exactly what we discussed in the video, in the course, for determining trend. So if we just kind of zoom out here, let's take a look at it on the daily. And essentially you can see it is very straightforward and works phenomenally well. The idea being when you see the blue and that is the overall predominant trend is in an uptrend. When you see the red, the predominant trend is in a downtrend. Blue uptrend, red downtrend, blue uptrend, red downtrend, blue uptrend. And then inside of that trend, we'll notice that I have used our two short-term moving averages and done the exact same thing. They're green when we're in an uptrend, and then they flip over red when we're in a downtrend. Well, technically red and purple, or pink, or whatever, depending on the color of your screen. And then essentially the idea being, as long as we are in a macro uptrend, as in we have the blue, we're looking to buy the dips. And then once that flips over and we're in a macro downtrend, the red or pink or whatever, we are looking to sell the rips. So, once we basically flip over right here, then every time we get a pump up and then the shorter term moving averages flip over, we want to sell, and then we can capture the down moves. And then, once we cross back in, obviously, to an uptrend, we're looking to buy the dips. So basically, you just capture the majority of the move in whatever direction it's in. Very simple strategy, and then also extremely effective as well. And then also just kind of going into a quick look on Bitcoin right here. This is essentially going to be, this is a Bitstamp chart right here. And, this basically shows us what our bull runs look like. And how they played out. So if we say, this is our initial 4-year cycle, and then once we see the bright blue cross under the darker blue right here, we come up for a retest, we get rejected, and we go into the bear market. Here you'll see once again in the 2018 bull run or 2017 bull run, we come up, we break down below it, we come back up and retest the dark blue once again, get rejected, go into a bear market. And then we have a mini bear market take place right here for the CVD dump. Again, we break down below the moving averages, come back up, get rejected by the 200 simple moving average, the lighter blue. And then, one more stab up to the top, double top, and of course, bear market once again. And then now we can see why I'm not using my bias. I'm using actual technicals to say that Bitcoin is in fact in a bear market or about to enter into a bear market, because once again we'll see we have broken down below the 200 exponential and simple moving average, came back up for the retest, took our long trade from this area all the way back up to the top, and now we have exited our position here because we are in fact getting rejected by the 200 simple moving average, which is the exact same thing that happened in our first bear market and also in our second bear market, and then once in our little mini bear market here. So we've gone through basically one crypto cycle, that's our 4-year halvening cycle, and a bear market, 2 crypto cycles, 4-year halvening cycle, bear market, 3 crypto cycles, and then now we are getting ready to enter into our bear market. So if it's happened every time in the past exactly like this, and if you look at thousands and thousands of other assets all across all different markets, which we'll look at some today, and I can show you specific examples, you'll see that what I'm saying is based on technicals, and over 95% of the time, no matter what market you're looking at, this is exactly what happens. So, but there are 2 different versions of the indicator. It's obviously very clear what's taking place here. There are 2 key factors on this indicator. The first factor being the slope of our lines, and the second factor being the cross of the lines. So for our short-term moving average, in order to scalp on different time frames, and it works on any time frame, these are going to turn at the cross. So the bright green is our 8, the darker green or lighter green, whatever you want to call it, is the 21. And so normally, obviously, they would be red and yellow, how I use them. But for simplicity's sake, to be able to just flip through assets like fast and effectively, I have color coded them. So red obviously is like a negative connotation, and the green is obviously a positive connotation. And then again, the 200s are left blue for positive. And then obviously when they turn over, they're like pink and red also. So, here we can see basically that just using this simple technique here, we would have, for instance, it would have taken you out of this position you would have avoided that 5.9% loss. But what often happens though is people actually sell closer to the bottom. So they end up taking like a 20% loss or something like that, and then end up FOMOing back into the top, and then it dumps back down again. So the idea being in this case that you use the short-term moving average to exit your positions to protect your principal, and then you can re-enter them once it flips back over green again. You can exit them if you once again flip back to the downside, and then obviously your overall macro goes from buying the dip to selling the rip once you have these indicators flip into like the blue switches to like the red and pink. So and now that's all the first version here, and what I want to do is I want to sort of demonstrate the difference between the 2 versions, as that's the importance, and I'm still experimenting a little bit to see which one I like better, but I think having both options is pretty great. And I did go ahead and just essentially coded in, or like did the script for both, so you could just switch between them, but it's easier to just throw it up on your chart as like 2 different indicators. But if we turn on the second one, once it is on, you'll see that this one actually dominates over it, so you can't see the difference. But when I turn off the first one now, you'll be able to just see a couple areas that change. So I'm going to do it a couple times, and I'll just kind of highlight those areas. So you can see here, this is with the version 2 on. This is back with the version 1 on. Again with the version 2 on, and then if we just zoom in on an area to sort of display the difference here, let's go to our first bull market ending, transition to the bear market. So instead of the slope on our 200 moving averages, again we're using the cross instead of the slope. So this is slightly different, but equally, possibly even you could argue more effective. In this case, this would confirm to you that this is a bear market here. So you would start shorting the rips or selling the rips instead of buying the dips, as where with the version 1, you're technically still bullish for this period from here until the slope switches over. So you're technically still buying the dips on this, which is fine. But I feel like the version 2 kind of alerts you that the transition is taking place or about to take place. There are obviously some occasions though where it's going to give you a false signal where it still has a positive slope to the upside. So again, if we turn that on, you'll see it takes away those. So it's a little different. Each one has obviously like their own benefits, but also some drawbacks as well. But again, we can see here on our 2017 bull market into 2018 bear market, here is our transition into what we account as the bear market based on the cross between these two, as opposed to with the initial version, there's still an attempt to save it, and still like obviously the rejection. So again, you're still buying the dip here, and then you wouldn't know technically to be selling the rip, but you would be shorting out of your position or selling out of your position, obviously with the shorter term moving average crosses. So, and then once again, we can see how does that give us a divergence? What does that tell us right now? Well, if this is our trend taking place currently, obviously when we got bearish on the market, or at least de-risked on the market up here at 60,000 on the retest, that obviously gives us a cross down. Once again, we cross down, confirm here. So you're out of the market, at over $56,000 at the absolute minimum, and then you're back in the market, which is where we took our long position. In this case, on the daily, it would have had you back in at 32,800, but we were trading the 4 hours, so we were actually in it from a little better of a price. I believe it was like 30,600 or something like that. But again, if we just switch off the initial one here, we'll notice again, this still technically has us in a bull market because we're attempting to save the slope on the 200 exponential and simple. But if we go ahead and turn that off, we'll see that that same transition has taken place. And again here, I'm not trying to make anybody cry. I don't want to hurt your feelings because you were hoping that you could quit your job and be a millionaire because crypto is going to the moon. But let's look at the first cycle. Once this flips over here, we retest the 200 and it fails and we go into a bear market. Here, we go into a bull market for another 3 years, whatever, retest the 200, it fails after it flips over and capitulates for over a year. And now here we see the exact same situation has taken place. So again, I'm not trying to hurt anyone's feelings, but the truth sometimes hurts. But would you rather know the truth or just live a lie? I think probably know the truth. So, but yeah, that's the breakdown of the indicator. Obviously, both versions are awesome. Like everything, I like the idea of having both versions and being able to just take a look at them at will, because, you know, it's always better to have, you know, more views of the market or more indicators, whatever, than just like have your own bias because one thing tells you what you want to see or you don't know to look at the other one, etc. So, very pleased with how this came out. It's extremely effective and also is, you know, basically the strategy that I typically use to trade. Like it's basically the basis of all my investing and trading. So and here we can see I have it brought up on 4 different time frames. We have it on the 15-minute, the 1 hour, the 4 hour, and the daily, just so we can kind of see like how it changes and how it's useful. So we'll see here on the 15-minute would have had us out at 44,700, back in here, and then out here at 44.7 once again. So you would have basically just washed on that move right there. But then it has you out of the market down to like 33.8, and then again potential up here. And now we'll see that we are actually breaking down below the 200 exponential, below the 200 simple, and potentially going to flip this over. So again, if we turn on the version 2 and turn off the version 1, we'll see here that this has already given us the no-go back here, as this has already flipped over red and told us that we're getting ready to enter into a what amounts to a 15-minute you know, bear trend or bear market. I mean, you know, it's hard to call it a bear market, but on that time frame anyway. So again, that's just basically telling you, and you can see the difference on the shorter time frame, that obviously if it tells you to get out of this position here and to stop buying the dips, you know, you're in a better position. But, you know, again, it's all about just trading with the trend and the difference. And then we'll see here on the, you know what, I can make these big too. We'll see here on the 1 hour, you know, once again, obviously this trend was basically all the way down on the 1 hour. It flipped the trend back over here, sort of gave a little false alarm here, but was overall confirmed back at 32,269, at which point in time you would have rode it all the way up to 41,000. And then again, you have a little bit of sketch area back in here, but technically you would have bought back in again at 38,000, rode it up to 44,000, and then here at 44,000 we crossed down below it and confirmed into a bear market or a bear trend, or just a, yeah, I guess technically it's just a short-term bear trend because it's our shorter moving averages, and we're still above the 200 exponential and simple. But again, if we switch over to the version 2 here, oops, if we switch over to the version 2 here, we'll see that once these cross back over here, it's basically telling you you're not as interested in buying the dips down here. But again, I'm still experimenting with it. I like both versions of it, and they both work extremely well. It's more about just being able to flip between the you know, different assets on different time frames quickly, and it tells you very clearly what's going on, whether you should be taking a position, whether you should be shorting or selling, buying, etc. And then if we switch over to the 4 hour, this is where you're going to get the most effect out of it, and in my opinion it's most useful for, like, you know, your regular scalping. You're not going to get as many false signals, and obviously the moves that it has you in and out for are going to be much more substantial. You don't have to like sit in front of your computer and make a bunch of trades, you know, because you only have obviously like 4 hours in a day. So here we see on the traditional one, once again, had you back into the market once the 200 exponential and simple have crossed back over, and the green is showing up on here. So it's going to be like 33.6, and then would have had you back out at 40,000, has you back in again at 40,000, ride that up to essentially where we're at right now, technically still in this position until this crosses back to the downside. And then again, if we switch over to version 2 here, we can see a little bit different here. As basically we maintain the 200 exponential to the upside here. So the entire time from back here, this would have been telling us that we're going to start buying the dips. You know, obviously still be taking our scalp moves inside of the position, but it would have had you actually enter back here at 30,800 with the version 2, as this is still blue, even though we're underneath price action, but we're getting the green cross right here. And then again, it has you up here, takes you out of the chop at 40,700, gets you back into your position at 38,900, and then still has us in the position currently. So, and obviously we already did the daily, so works extremely well. Definitely a big fan of it. I like both versions. Not sure which one I like more. Typically I use the slope of the blue moving averages, the 200 exponential and simple. So it's more of like my traditional sense, but I do like the early warning sign that the version 2 gives me, as it can basically alert you that while you're still bullish, you know, it might be time to start looking at it with a little bit more of a bearish view. So, but yeah, that's it. Looking good, very awesome, and works phenomenally. So, good to see you, our kits. Glad to see you like it, my man. Obviously, that will be available this week to everyone in the trade group. Very happy with that. Turned out extremely well, and then we'll be moving on to our next lesson from there. So yeah, so let's jump back into our regular technical analysis now that we took a quick look at that. And obviously all the other indicators that I have published are available for free in the description. So if you're new to the channel or you haven't used those yet, highly encourage it. I have switched over to this on a couple different charts here. Some of my traditional indicators are obviously on some of these charts as well. But again, I'm really just trying to like hammer through all these assets and use them accordingly. So I'm going to touch on it a little bit as we're going through our normal technical analysis. So here we have the TNX 10-year Treasury yield. Obviously, we had on the daily here very clearly entered into a bear market back here at that 2.97 once we got the red and purple slope flip over, and then we entered back into a bull market back here at less than 1%. And now, while we have broken down technically below the 200 exponential and simple moving average, they still have a positive slope to the upside. So again, you know, everybody else is bearish at the last minute or after the move happens, and bullish vice versa. You know, we're obviously ahead of the game on this, and using this strategy obviously just, I mean, this indicator, I think it takes out a lot of the noise, and just, you know, you can literally flip on a chart and see very easily what you should be doing. So here, if we look at the weekly on the 10-year, you know, obviously showing some weakness here, getting rejected off of these and still have a negative slope to the downside, telling us that, you know, basically this is not good, or that it's overall bearish. And then if we look at the monthly on this, again, we would still be below the 200 exponential and simple moving average, you know, to the downside, obviously, attempting to get that little scalp up here and then getting rejected. So giving us a little bit different of a picture, but overall, I like what we're seeing here. I like how the indicator is working on all these different assets, basically just taking any confusion out of the charts. But here on the monthly, obviously, we can see, you know, basically bonds went into a bull market, or the yield went into a bear market back in 1991 on the monthly on this chart. So, and then again, if we flip over to the weekly, you know, there's a little bit of chop in here right around like that CVD time, but overall, essentially just keeps you in and out of the trade at the right time. You know, back in what, 1966, 67, I had you up in the bull run there. And then obviously about 84, we all know what happened then. You know, that's when the never-ending downtrend started. So, but overall, very nice. You can obviously still take scalps, but you're essentially trading against the trend. So that kind of like fights my strategy, as like, you know, you can basically, I use this as an example all the time. You know, if you're trying to like swim in a river, you can swim upstream against the current for a while, but eventually you get tired, and then the river's going to push you down the stream. but you can take one of those little like floaty donuts and jump on it with like a little cooler and throw back a couple beers, and you can float forever and never get tired because you're not fighting the stream, you're going with the current. And that's essentially why I like to trade with the trend, and it's so important. So what we're looking at here is this daily trend starting to flip back over? Were we just in a temporary little bounce right here, and then we're going to continue down to zero rates? I mean, we'll have to wait and see, but overall, like I said, just super simple. It's very easy to just look at this and say, oh, there's a bunch of red, don't want to be in that. And then when you start seeing the blue and green pop up, it's like, oh, that's looking juicy. And then if we look at our TLT, obviously, let's take off our drawing tools for a moment here. Again, obviously just telling us the same thing, 20-year treasury, basically having us in a, nice bullish uptrend from 2019 at $120, and then basically telling us we want to be getting out of the market up here at like $160 for the 20-year treasury. And now here we are back above those moving averages, attempting to confirm this trend back to the upside. We'll have to obviously wait and see how it plays out, whether we get like a giant head and shoulders or whether this continues back to the upside. If we switch over to the weekly, we'll see obviously cross them down here around the same time, cross them back up on the shorter moving average back here at like 142. Technically still in a bull market. Is this just a reflex rally, a reaction rally off of the 200 exponential and well, really 200 simple right here? Or are we going to just continue trending up as the yields go to zero? Obviously, bonds can only ever get, I mean, they can keep getting more expensive, but the yields can only ever really go down to like basically zero, as it's directly based on like the price you pay for the bond. The interest rate doesn't actually change on it, like the actual coupon rate. So, but once again, on the weekly here, we can see we've just been in a, perpetual uptrend since, 2006 on here. And then obviously the monthly as well. And again, I'm not going to touch on like the other indicators as, we always use those. It's very clear how I use those. No doubt in anyone's mind. Just kind of like showing off how this works on some of the different charts here. But we can see pretty clearly what's taking place here. I still think that we're putting in a head and shoulders right here. We obviously have 22 more days left in the month. But, we basically topped out exactly where we thought we would at what amounts to like our right shoulder point right here. And then we have a very clear neckline down here on the monthly. Obviously, whatever happens for the next like 22, 23 days will determine what's happening. But this looks like a pretty clear rejection off the 382, leaving behind a nice rejection wick on the top and only seeing like red price action since then. And then obviously on the monthly, the short moving averages have flipped over to the downside. So unless we can cross them back to the upside, it's going to start telling us on our shorter time frame, but on the monthly chart, that we basically want to be like out of these, selling them, whatever. But obviously the momentum on our other indicators telling us the same thing. And then if we switch back to like the weekly here, we'll see this cross back to the upside. But a lot of times what will happen is you'll get a powerful sell-off, you'll get a bounce, cross a shorter term moving average, and then you'll get rejected and come back down. So what we're paying attention to is, what follow through do we get on this situation? We can see obviously very clearly this was our previous time when essentially the exact same thing happened. We came up here, broke all the way from the bottom of the channel to the top of the channel, came back down, put in our left shoulder, bounced up, put in our head, busted out of the top of the channel briefly, came back down, put in our neckline once again, and then our right shoulder, crossed this back to the upside momentarily, at which point in time it gets rejected, and we actually come down below the 200 exponential and simple moving average and nearly down to the bottom of the channel. And then a similar situation right here with our basically like double top. We come in, cross it back to the upside here and then get rejected back down to the heart line and then back down to the bottom of the channel. In this case, I think realistically, that's probably what's going to happen right here. We're probably going to essentially get a rejection. This momentum rolls over. On the Jewel Thief, we have rolled over already out of the bullish control zone and have a negative slope on the stochastics. And then obviously we do still have green histograms on the TJD TDMACD on the weekly, but the slope line is still red. So it's definitely a possibility. Again, it could go either way. I think more realistically, though, these 20-year treasuries are coming down. So, but we'll have to see. There's a lot of factors in these markets. Anything could change. So, try to keep a non-biased view on everything. Let's take a look at the DXY. Like usual, oh, look, the dollar didn't go to zero. Who'd have thunk it? I know everybody is still out there screaming about the dollar and how it's going to go to zero and it's going to crash and the infrastructure plan and all this stuff. But let's be real here. we're right back at the neckline again. This was our key resistance area, whether we're looking at either, we have our clear two patterns here. We have obviously either a Eve and Adam double bottom, a rounding bottom, followed by a pointy bottom. And now here we are at the yellow resistance line, which was our previous resistance. And then obviously the other alternative is this was our inverted left shoulder. This is our head. This is our neckline, inverted right shoulder. And then here we are again. We broke out of what amounted to, there was triple divergence on shorter time frames throughout this like little ascending channel right here. We broke down from it, basically got the perfect measure move in yellow here, and then immediately everyone got extremely bearish again, even though it was obvious what was taking place. And now here we are right back up, testing the top of the channel. So we have very clearly put in a, aside from the bullish divergence that was taking place, we have put in basically a low, and now is that a higher low? Sure looks like it might be to me. So we'll see what happens. If we are able to break through this area, we might just chop sideways here. But in my opinion, the longer we spend at this resistance, the longer we spend punching at this resistance, trying to kick through the door, trying to break in, trying to break out, the more likely we are to break out. Because what happens is there's sell orders or people that are bearish selling that resistance, assuming it will fail. And then the more time we come up to it, every time we eat through those sell orders, and then finally there's no more sell orders, and we break up to either our measure move or our next moving average or our next substantial, resistance point, etc. So in this case, Fibonacci wise, we have one at 95.75. We also have one at 90. We have the measure move of the Adam and Eve at 96, or we have the measure move of the head and shoulders at 98. So, you guys know how I feel. I don't have to continually tell you over and over again, but it's funny how everybody switches after something happens. Now, all of a sudden, all last week, or all for the last couple months, everybody's been so bearish on the dollar, saying how it got rejected and it was going to go back down, etc. We had the measure move in place. We're expecting this exact move to take place, and then now here we are, beaten back at the top of the door, and all of a sudden everybody's, oh, the dollar's bullish again. Oh, it's so funny. It's like the hindsight TA is rampant all over really everywhere, but it just absolutely cracks me up. So we'll see what happens over like the next couple weeks, couple days, etc. But obviously this is looking stronger and stronger by the day. Looked like we were basically just regaining strength. Obviously, if we flip over to our weekly chart, we can see very clearly here on the weekly chart, we have a series of higher lows, very clearly. One right here, very clearly here again, and then again, one more. And then obviously we have quite a bit of bullish divergence taking place. This is obviously looking like a W, double bottom. Again, depending how you look at it, we are back at resistance. The longer we spend at resistance, which at this point in time has been, a couple months basically, just eating through that resistance, eventually we would expect that measure move to take place and bring us up to like that 96 range. We have very clearly bullish divergence taking place on the TJD, TDMACD. We flipped the slope over blue. We're powerfully trending to the upside. And now on the weekly, we are inside of the bullish control zone. And then again, let's flip back over to our monthly chart. And once again, we'll see basically we're in a long-term downtrend here. When that slope line flipped over red, we now have multiple green histograms, which is the initial indicator for the TJD TDMACD. Once this crosses over the zero line and past the slope line, that will be our second portion of the indicator, and then the third one flipping this slope line over blue. And then here, as anticipated, as predicted, as clearly stated on this channel for probably months at this point in time, I would say, we can look at the last 1, 2, 3, 4 times this has happened. We were inside the bearish control zone. We got the hard buy signal. We went parabolic. We were inside the bearish control zone. We got the hard buy signal. We went parabolic. We were inside the bearish control zone. We got the hard buy signal, and we went mini parabolic. So now here we are once again inside the bearish control zone, getting the hard buy signal on cross, multiple green histograms in a row. So what's going to happen? No one knows, but if I had a guess, I would say we're probably going to go parabolic somewhere roughly around, if we look at those previous moves, we've done this plenty of times, but that's 20+% to the upside. 20+% to the upside. Here we have, again, this one's a bigger one, obviously, 33% to the upside on the DXY. The next one after that was our weakest one. This one, depending where you went to, was somewhere in between 5 to 7% to the upside. So what are we going to get out of this one? I don't know, probably like 10, 15, 20, 30%. Who knows? We'll have to wait and see. But, But again, I'm just using technicals. I'm not putting my bias into it. I'm not making up fundamental reasons why the dollar has to go to zero because they're printing too many of them. I'm not, telling you guys with my emotions. I'm using actual technicals. So we'll see what happens, but sure looks good to me. And I'm sure everybody else is going to be screaming how the dollar is going to have a squeeze and it's going to be bullish and blah, 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 after it's already happened and proved itself. So let's jump into, there's quite a bit of volatility on the metals. So let's jump into them and take a look. Obviously, once again, we expected this move to happen. It's been very clear that gold and silver were getting ready to sell off heavily. I know all the Peter Schiffs out there and all the silverback, idiots that just found out about precious metals think that we're about to go into this massive bull market. Again, I love gold and silver. I am an investor. I use them as my physical savings accounts. But the truth is, the chart is telling us something completely different. So I think maybe we should listen to the technicals, not some morons on the internet or somebody that's trying to sell you something like gold or silver. The last time this happened is the exact same chart as our last bull market here. Most people probably have not been involved in gold or silver since 2011, so they don't actually know that, nor can they actually look at technicals. So we'll see exactly what happened here. We went absolutely parabolic to our previous all-time high of like $1,900, after which we'll notice that the blue slope here started to level back out. We came back up, attempted one more time to flip it back over blue, at which point in time we got rejected and went into a long-term downtrend, a bear market. When that flipped over was in 2013, and when it flipped back to the upside was in 2016. But I did not technically get bullish on this market until our breakout from this area around it was 2019 at like $1,336, right around this range here. But obviously, do you want to be involved in a market from 2012 to 2019 when all it did was go down for 7 years? Or would you rather use that capital somewhere else functionally and make money? So when I tell people, essentially what I'm expecting to happen up here is a rejection as we're losing strength, as we have lost the slope on the 200 exponential and simple, that I expect one more push up to the upside. Exactly what we had happen here. We push back up to the upside, get rejected, and then lose, let's say from our little push up peak right here to the bottom of the trend, lose over 40% of our value. I get it. I understand people want to believe in sound money. They want to believe in Bitcoin. They want to believe in gold. They want to believe in unicorns and Santa Claus. I get it. It's fun to believe in crazy stuff, but let's just use the technicals because that's what this channel is all about. We're about technically trading and making money, not trading with our heart and our emotions and on our fundamentals. So here, once again, we have very clearly come up here, lost the slope on the 200 exponential and simple moving average, gotten clearly rejected, and now here gold is basically starting off our capitulation move. We got a reaction rally off of our horizontal support here at 1679, which we touched perfectly. This is when everybody was calling for the double bottom, and then gold was going to go parabolic. They were loading up their suitcases. They were buying up their little 1 ounce coins or quarter-ounce coins or whatever. The truth is, it was obviously very clear this was just an attempted retest, an attempt to save the trend before we go into a long-term downtrend. So hope you didn't buy too much. Hope you didn't pay ridiculous premiums because it does not look good now. And once again, we have overlaid essentially the previous, the previous move from that last bull cycle that we just looked at. And very clearly here, we can see what the price action looks like, and it's not good. So we'll have to see what happens. But, I don't want to say I told you so, but told you so. And then obviously here on our weekly chart, we can see a little bit different of a picture taking place. Obviously, it's going to take a little bit longer to give us an idea, but this was our previous bull rally right here. Is it possible we get a situation like this where we come down, retest the 200s, and then go back parabolic? Sure, it's definitely possible. But once this weekly 8 and 21 cross to the downside, why be in this asset? If we're at least in a short-term downtrend, even if we're on a weekly bull trend still, why even be in the asset? Why not just wait, put your money to work somewhere else, and then when it crosses back to the upside, we can reinvest in this or, pay attention to it, etc. So, but here we are at a key level. Basically, we got to see what happens here. But this is a very, very key support level. We got a reaction rally off of that support level. And I mean, what's the deal with a reaction rally? It's an immediate move off of a previous touch of a key support or resistance. So if we got that immediate move off of this same area again, what is most likely going to happen? Well, it acted as support here, retested and put in a very bullish candle here and acted as support, and then we put in a lower high. So more than likely, this was just a reaction rally once again. We'll come back up here, try to test our resistance, and then break down from it. The momentum indicators and oscillators are still very powerfully pointing to the downside. So I do expect continuation to the downside on gold and, of course, silver. So silver, here we are, already hit the $22 price target, which was basically the level I've been calling out now. I know I hurt a bunch of people's feelings, but the truth is, it is what it is. You know, I'm not here to make you feel good about yourself. I'm here to tell you the truth about technical analysis. So here on the daily, it was very clear. Obviously, once again, silver stayed bullish for quite some time. This is the version 2 of the TJD master on here, and we can see very clearly during this consolidation period, the 200 exponential fell below the 200 simple, telling us that we were losing momentum to the upside, and that we can anticipate, you know, either a sideways consolidation downtrend or a powerful breakdown here. Obviously, that's a pretty powerful breakdown. I would say, at least for now, we are still above some of our key support levels. We have those previous two little wicks down here at like 21, yeah, basically 2165, 2175, somewhere around there. But obviously, this is looking worse and worse by the day. And then again, if we flip over to our weekly, it's going to tell us that same thing again, the same thing we've been expecting. You know, our previous all-time high rally, basically up to like $50 back in 2011, came back down as soon as it flipped the 8 and 21 to the downside. You know, assuming that we were just using this, you know, that basically went into, let's not even count the crazy CVD dump right there, but that amounted to a 64% pullback. You know, depending on when you were looking at, if you were going by just the 200s or that 821 cross right there, it basically kept you out of a massive, massive drawdown. So here in this case, we have now just crossed these over red on the weekly for the first time. So again, you know, is now a good time to be accumulating, filling up your bags, stacking up your suitcases, filling up your safe? Probably not. So, you know, if you were out there paying ridiculous premiums through this whole situation, matter of fact, if you were one of these middlemen charging ridiculous premiums, well, have fun now, because you're probably underwater on your position, and you're going to have to drop down those premiums real soon, or you're going to be sitting on a bunch of silver that you're underwater in when we go through like a 40+% correction. So, but what do I know? I'm just using technical analysis. So, and then once again here on the gold silver chart, obviously, you know, we were in this downward descending, you know, triangle pattern or wedge pattern. We now have gotten the breakout. You know, as expected, as anticipated, we were chewing through our resistance right here. We got that wick up here as silver dumped. But, you know, obviously it had like reaccumulation or reaction rally off that. So it left behind a little wick, but we have all week now to continue through the upside, as we have basically just eaten through all that resistance there. I would expect gold to still lose value, as we're now confirming into a downtrend. I would expect silver to lose value much faster, especially when all these like new silver back, you know, people who just discovered silver at $30 an ounce with all-time record high premiums finally start to dump their stuff. They're going to be running to the pawn shops. They're going to be trying to sell it back to all the websites online at a loss, because they're not going to get any of their premium back, and the price is substantially lower now. But again, that's good. I want to flush out all these silver people, because I would like to accumulate more silver at a good price before we go into our absolutely parabolic bull run on silver. But the truth is, you know, are these people going to be comfortable holding silver down to 20 bucks or 17 bucks or 15 bucks? No, probably not. They're going to get washed out. People like you and me are going to scoop up all their silver, and then silver is going to go absolutely parabolic, probably down to like that 40-to-1 gold silver ratio. But I have a feeling here very soon we'll be up at like the 80 to 90 silvers to 1 gold. And again, this is our weekly chart, looking extremely good and doing exactly what we expected. Platinum is next, doing exactly what we expected. Got a initial support, you know, basically off of the 377 and then the 528, and now we're capitulating down through those levels under $1,000, as we have been anticipating for some time. The real question is, do we get down here to like our $800 target? Do we hold support at like 830? We'll have to wait and see. Time will tell, but obviously I consider platinum to be extremely undervalued right now, and I'm looking forward to scooping some up at a great price. Once again, when we got the 821 cross here on the weekly at 1155, it was very clear that this uptrend had ended. We broke down from some very key support areas as we had like that channel to the upside, which for some reason I have deleted. We can just kind of chuck it back on here. What am I doing? Oh, there it is. Man, I guess it's been a long day. But yeah, that's our channel that we were basically operating inside of, kind of sloppily drawn on there. And once we broke down from that channel was around the same time when we lost the 821 moving average, and it was very clear this was getting ready to retrace. The real question is just how deep is it going to go? If we turn on our Fibonacci retracement levels from the bottom here to our top here, we can get an idea. We are obviously now at the 382. So again, I would expect that to act as support, as it is a 200 exponential moving average, and the 382 of this move up from the bottom to the top. In all reality, though, I think we'll probably get down here to like 868 or possibly like 785, 800, right around that level. We'll have to wait and see. Obviously, we are now inside the bearish control zone. We have saw nothing but red histograms. We have flipped the slope over red, and we got the hard sell signal way back here. So very clearly, very clearly, metals have been in a bear market, going into a bear market, and I would expect them to stay in a bear market. Yeah, so these are probably going to get absolutely wrecked. First Majestic, these haven't been looking good for a while. I told you guys I've been out of basically all of these next plays here, pot stocks, mining stocks, all this stuff. I mean, I have very small positions left over, but I have taken profits along the way and seen, other than them attempting to try to carve out a bottom here, haven't really seen much from them. And it's only going to look worse over time, as even though we're getting like some reaction rallies off of key moving averages, like First Majestic here, we got the cross back at 15.92. Here we are at 13 bucks now, trying to get back above the 50.55, failing miserably. So again, I think we're coming down to like 10.80. We've seen nothing but red histograms flip the slope over red. We had one little attempt right here to save it, put in a lower high and failed. First Majestic looks bad. I mean, they're all going to look equally bad, some probably worse than others. Silver junior miners, getting the reaction rally off the 528. If we switch over to our weekly, once again, very bad. 821 have crossed to the downside, coming down here, bouncing off of the 89, came up, got completely rejected off of our lower term moving averages, and now we're headed down here to our 200s next. $12.36. Nothing but red histograms. We got denied by the slope line perfectly when the histogram tried to cross back to the upside, and the slope flipped over red, and we've seen nothing but selling since. I expect this to go much lower. Yeah, that's our silver juniors, SILJ. USAS, Gold and Silver Corporation, still just getting absolutely wrecked, trying to carve out a bottom. Maybe a short-term scalp play in mind, but again, we're trading against the trend if we try to take any positions in this, so there's just really no reason to. 8 and 21 crossed the downside back here at like 275, lost over 50% of its value since then. It's at a key area. This was our left shoulder potentially, our head, and now are we putting in our right shoulder? Possibly, but you know what? This looks like absolute shit. So, at this point in time, I'd rather just let it play out. I'm not looking to jump back in this thing anytime soon. And if we flip over to our monthly chart, we'll see here exactly why. We got the 821 cross on the monthly to the downside. This is probably the worst of any of these mining stocks. I mean, any of the semi-legit mining stocks, I should say. Let's look at our pot stocks next. Tilray on the daily tried to get back above 200 exponential and simple. Now we're down below them and failing. Basically just getting crushed right now. Once again, exited these positions. I have no interest in just holding these. Now that we have 821 cross back to the downside on the weekly, I expect further downside. We're now below the slope line and flipping over red. Tilray looks bad. I honestly think they only got a bounce off that like better than expected earnings, and now they're just going to keep going down straight to the gutter. ACB looks even worse, barely even got above the 200 exponential simple, just getting absolutely wrecked. Maybe again there's like some short-term play in there, but the 821 have crossed back down to the downside. Looks absolutely horrendous. Trying to carve out a bottom, but doesn't look good. Canopy Growth, probably the worst of the pot stocks we look at here. If we switch over to the weekly, again, 821 cross to the downside, below 200 exponential and simple on the weekly. Looks absolutely terrible. I imagine this thing probably looks even worse on the monthly. Yep, here the monthly has crossed back to the downside. So this was our attempt to rally back up, got rejected, and now we're going probably to zero or somewhere close to it. We're going closer to zero than we are to $56. So I anticipate further downside potential on this. Again, we're trying to do something down here, but no thank you. There's way better things to be investing in, or trading. URA, uranium, same thing again. out of this back at the 821 cross. Looks absolutely terrible. Selling back off, had a really nice move up to the upside. But when we look at our longer term charts here, we can see very clearly that there's no surprises here. We basically got rejected perfectly at the 382 off of our zero line from the previous all-time high. This is the URA, uranium ETF. So we bounced up to the 382 and now more than likely coming back down to a key moving average or potentially the 236. Yeah, definitely just looks like it's going to get absolutely wrecked. All red histograms, losing the slope line, well below it now. Divergence signal from the top of the range on the weekly. About to get the 821 cross to the downside. Yeah, I mean, the money was made on uranium. Now it's going to go into like a year-long bear market till everybody forgets about it again and gives up. And then we can accumulate the bottom once again and ride it back up to, what amounts to eventually all-time highs. But when's that going to be? 5 years from now? 10 years from now? I'm not going to sit here and hold it through a bear market. UEC or through like a 1 year plus retracement. Uranium Energy Corp. Same thing, broke down below 200 exponential and simple, tried to rally back up here and failed. If we switch over to our weekly chart, we'll see the 821 have crossed to the downside. Again, as long as that's crossed the downside, there's no reason to be in it. If we bought the cross on the way up, we got in at $1. If we sold the cross on the way down, we got out at 267. That's like 250% of your money. No reason to be trying to, pick up pennies in front of a freight train right now. We have almost all red histograms, flip the slope line over, bearish control zone on the weekly. Obviously, you guys know what I'm about to say. Uranium looks like shit. CCJ Cameco broke down from our, very clear little channel, ascending channel here. Got the cross on the 821 on the daily. It's essentially same exact thing. Now here we are about to get the weekly cross. Got rejected exactly as expected. And I expect this to continue to the downside to our targets of like 1270 or 1075 based on our Fibonacci levels here. Again, does not look good. Copper was acting inside of this channel to the upside since our crash back here. Copper went absolutely parabolic. We hit that perfect measure move of the, let's switch to a longer time frame. Excuse me. Hit that perfect measure move of our W pattern, broke through our neckline or like the top of the V support. So we have a V here, we have a V here, we break out, we get the measure move from the bottom of the channel or the bottom of the V to the top of the V or neckline. And then that measure move took us up to a slightly new all-time high. This is CPER index fund. And then of course we topped out exactly at the measure move, exactly at the 1.618 of our sell-off from the top of the V to the bottom of the V, hit our target 100% perfectly, broke down from the channel, and now we're expecting continuation to the downside as we have broken down, come up, put in a lower high right here, and then I expect it to continue. The continuation should bring us down to our initial target, which is the measure move of the channel itself. Again, technical analysis works like a charm. That's why we do it. But maybe one day we can get on here and I'll talk about our feelings, and we'll see how much money that makes us. But eventually, this should lead us down to our breakout point where we should find support and then continue to the upside. I'm extremely bullish on copper. I am extremely ambitious for the future of copper, but let's be real. Let's look at what the charts tell us for now, and we'll talk about the fundamentals later. But it looks like we're about to lose the 821, get across the downside, hard sell signal, leaving the bullish control zone, all red histograms, flip the slope line over red. Copper is going down. It is already going down. It's going to continue going down, and no one's going to be surprised because we've been saying that for some time. The lithium fund still on its way up here. LIT, lithium battery tech ETF, still up here on our way to the target. Almost there, guys. One of the best charts still in existence right now. We are very, very close to the 1.5 at 87.50, and then finally our 1.618 at $91. We're at the end of this. I think we're very, very close to topping out on this. Still in this position for now, but I mean, at this point in time, ready to take profits and get out of the way of these markets. HYDR, the Global X Hydrogen ETF. Again, just waiting for a value area to buy this. It has basically just, started to like carve out a channel. When we topped out here at a lower high, we expected to put in a lower low. We did get that lower low, and now what we're waiting for is one of these key Fibonacci extensions to get hit. I expect us to come down here between like 2150 and maybe like 2125, somewhere around there, at which point in time I'll start looking at potentially a bottom here. But obviously, just because it's so new, there's very little data. lobster futures, still trying to carve out that bottom down here. You know, everybody, all these lumber yards are loaded up on lobsters. They got Maine lobsters, they got rock lobsters, they got saltwater, they got the little bubbly things to keep the lobsters happy, maybe even a little heater in there depending if they like that hot water or cold water. But the truth is, everybody's stocked up on lobsters. Nobody's out here buying them. You know, what's going to happen? Well, if we hang out in this area long enough, we're probably going to break down again. This looks like a bearish. Well, it could go either way, honestly. This thing's had a massive sell-off. I mean, it's over 61.8% of the move. You know, that it really should be bottoming here. It honestly should. I think futures may tell a little bit different of a story just because everybody's so stocked up on wood right now. But, I mean, the truth is, this probably will end up being the bottom. We'll have to wait and see. Obviously, longer time frames still look terrible. All red histograms for literally months at this point in time. Flipped over to slope red. You know, inside of the bearish control zone. Hit our target perfectly to the downside. Hanging on to the 200 exponential and simple moving average perfectly on the weekly. Obviously, we got the cross back here, and it was very clear that lobsters were going to go down in value. Yeah, I mean, we'll see. Are we going to make it down here to like $381? We might on futures, but if you go to like a store right now and try to buy some wood, it's like regular prices again. So, but maybe it'll go even lower as we start seeing like macro deflationary environment. We'll have to wait and see, honestly. But I mean, Caterpillar. I mean, this is, you know, we've been talking about this. We're just hanging on to the 200 exponential and simple, barely at this point in time. If we flip over to the weekly, though, we have gotten 821 cross to the downside. We have lost our slope line here. We have all red histograms. We are inside the bearish control zone. Again, the infrastructure trade is done. It has been done. We knew that when we left this channel right here and broke down from it. It was very obvious what was taking place. You know, we would expect, honestly, a retracement back, a heavy retracement back, at least to the top of the previous wave. So $170, something like that. We'll have to wait and see, though. This thing could get absolutely crushed. I'm not trying to run back in here and try to pick the bottom on this. As again, this is that long play. And if we look at this chart and we look at what it did previously, let's switch to the monthly here real quick. Our previous time, we basically did a similar situation, you know, where we go on a parabolic run, have a massive downtrend for like a year, go on a parabolic run, massive downtrend for like a year, and then we started what amounted to a potential like 5-wave structure again, go on a massive uptrend for till 2011, and then we go down until 2016. So 5 years sideways to down. And then again, from January 2016 till January 2018, we go on a 2-year run to the upside, and then again, we lose 49% of our value. And then again, obviously from the bottom right here at March, well, we know when that was, obviously March 2020, until basically we topped out here in May of 2021. What do I expect to happen? Well, if I had to guess, I would say we probably lose 50% of our value. So I think somewhere in between 147 to like maybe $160, somewhere around there, more than likely will happen based on technical analysis. And also my feelings. John Deere looking slightly more bullish, but essentially the exact same pattern. I mean, same channel right here, you know, broke out of it, trying to stay a little more bullish, has not gotten the measure move yet, still staying above the moving averages here. The weekly chart looks a little bit better as we have basically averted the cross, but I just expect this to just put in a lower high. We lost the slope line. We do have a couple green histograms. We are trying to move the Stochs back up to the upside, but, you know, maybe we even come up and put in a new all-time high, but after that, I think, you know, this thing isn't just going to all of a sudden go parabolic. Maybe it will. I don't know. Maybe it will. We need to farm those veggies. Antero Midstream Corporation, AM. This is that water play, that clean water. You know, again, got the 821 across the downside. Looks weak. Breaking down. Weekly chart. Looks weak. About to lose 821 to the downside. I expect further downside potential. I mean, way down. This thing might lose 50% of its value. I mean, all this stuff is like the same. Maybe we just all of a sudden, all the markets just start going up again and everybody's happy and we all hit the moon, but I doubt it. Cemex, CX, again, we have that same channel. You know, all these industrial players are basically the same. Same with like a lot of the material sector as well. Same channel, inside the channel, breakdown from the channel. It was acting as support for the last year. Now it's acting as resistance. So measure move, take us down to $5 or whatever. I mean, looks bad. I'm not even gonna bother. Yeah, we already know. We already know what's going on here. CLF, Cleveland Cliffs, that steel play. Again, same channel. We broke down from the channel. We reclaimed the channel and put in a new all-time high. You know, as I was basically saying, I thought would probably happen here. I still think that there's a possibility we get up to like that $28 mark. I don't know if it's going to happen at this point in time. As we broke down from the channel again, and now it's acting as resistance. I do expect it to roll over here and come back down to like 15 bucks or much lower in time. It is still showing some strength though. Did just put in a new all-time high, so looks better than most of the charts we've looked at. Let's look at forward. This thing's about to be found on road dead, if you know what I'm saying. 821F crossed the downside. It's losing key levels, trying to hang on for dear life right here. But I mean, the truth is, it's basically just hanging on to 21. It could very easily come back down here to like, I mean, $10 to $11. All red histograms, hard sell signal. It looks bad. We put in some clear bearish divergence right here. Bearish divergence on our weekly chart. This thing looks like it wants to see continuation to the downside. It looks like it's basically, it's just a little late to the party for the sell-offs. General Motors, again, I mean, this is all the same chart. I should just put up one chart and then I'll just type a name and pretend that that's what it is. You know, very clearly in a channel for the last year, every time it was at support, it was getting bought up, broke down from the channel, kind of going sideways right now. I expect eventually it comes back down to like $41. You know, at least to the 236 at 45, maybe to the $36 range, maybe lower. We'll have to wait and see how bad any of this gets. That Hasbro play, again, this is one we're looking at for the potential like breakout before earnings, and then it just gapped up and went parabolic. So I did not get entered into this position. So, you know, we had spoke specifically about how we broke through a key level at the 786, and we wanted to see when it comes back down, does it hold as support? And of course, now it has not hold as support. It is breaking down from that level. So if we look at this chart on a little bit more of like the macro time frame, this is where it really looks bad. You know, we basically came in, put in a slightly lower high right here than our previous high, and we're just hanging on to these moving averages. I expect it to come back down, find support, and then we should be able to get a good entry on a long time frame. And when we switch over to our monthly chart, this is where it starts looking good again. It basically looks like we went into like nice little sell-off here, come back up, 821 have crossed back to the upside. So there's potential we come up here and put a new all-time high. But again, we got to wait and see. We did cross back over the green histogram above the slope line, but that happened last time and we got rejected. So got to be real careful on this one. But I think there's definitely a play to be had here. But again, got to just be patient. There's no reason to just be like, there's so many better trade setups to just be taking like mediocre looking ones, in my opinion. So, but yeah, that's it. Take a quick break here. I'm gonna get a drink and clear my throat, and then we will jump into, we still have our, obviously that was our commodities. So we still have our indexes, and then we will look at tech and crypto and friends. So give me just a minute and we'll jump back into it. Don't go anywhere. Stay. Bear with me. I feel like I'm about to sneeze at any point in time. So, okay. Let's jump back in, keep this moving. I'm gonna try to keep this one kind of short. We're at an hour. All right. Well, we kind of already covered Bitcoin. We did already cover Bitcoin. So let's look at our VIX here. I'm expecting a big play on this bad boy in the very near future. I've been operating inside of our. No. Oh, here it comes. Oh, no. Damn, I hate when you're like on the edge of sneezing. Um, yeah, very clear descending channel taking place right here. We are nearing the bottom of the channel. The previous times when we got down to the bottom of the channel, what happened? This was a 85% move on the VIX. This was a 75% move on the VIX. This one was not off the bottom. This was off the bottom here. That is a 95% move on the VIX. Here we got another one right here. 78% move on the VIX. This one was a little bit weaker here. We got a only 66% move on the VIX. So, I mean, what's getting ready to happen? Let's be real. Probably like a 50 to 100% move on the VIX. And then obviously, when we zoom out and look at the big picture, we can see that this is basically just a giant channel that we've been going sideways in. The heart line is where we just got rejected from here, and we're in the bottom portion of the channel. The massive, very, very bearish area is down here at like 10. The very, very bullish area starts around like 43. We've only been inside of those two areas a couple times, and we normally do not stay there long. So if we did break out to the downside from this area, to me, this looks like an extreme play out of the bearish zone. Or if we just find support where we have been continually finding support throughout this entire range, I would say that, basically what we're looking for is something like this, like 50% play off the bottom here. So, but obviously, that's going to tell us that there's something going on in the markets here, some excitement. So yeah, definitely paying close attention to that. Next we have the Dow Jones. Dow still looking strong. Obviously switched over and put the TJD Master on this one. Keeps it pretty simple here. Get you out of this little pullback we had right here and then back in the game. Still very strong, very powerfully to the upside. And then obviously very clearly get you out here before the CVD dump, get you back in near the bottom. And then you get to ride that bad boy back to the upside. Yeah, I mean, it's nice. Works good. Obviously, Dow still very bullish. New all-time highs. Left a little gap behind. Maybe we come back down and fill it. I mean, I remember saying we were in a melt up like a year ago. That I was expecting these markets to just melt up, and here we are. People were asking me, "What's a melt up?" This is a melt up. This is a melt up where it just goes up and up and up, and nothing. No matter what happens, it just keeps going up. What could change these trends? Well, if all of a sudden we start getting good news. Every time we get bad news, the markets continue to the upside because everybody says, thank God the Fed will never raise rates. They'll never stop their purchases. Like, bad news is good news because we're in fucking opposite land. Well, if we start getting really good numbers continually, eventually the Fed is going to have to figure out a way to lie differently, or actually have to do something. Now, are they ever going to raise rates? No, they'll never raise rates. It'll be like 5 years from now, and people will be like, they're getting ready to raise rates. I know it. And they're never going to raise rates. Will they taper their bond purchases or their mortgage-backed securities? I mean, eventually, probably a little bit. They'll be like, we're going to only buy, instead of 120 billion per month in mortgage-backed securities and bonds, we're only going to buy 119 this month, or maybe we'll sell 5. They're never going to do anything. They can't do anything. They're painted themselves into a corner. They're afraid of a taper tantrum. It's like your little kids. You took away their toys. They spaz out. You're at a restaurant. You're embarrassed. You don't know what to do. So you just give them back the toys. So then after a while, just the thought of them losing their shit is enough that you're not even going to take their toys away. That's exactly what's going on right now. So S&P melting up, continuing to melt up, going to keep melting up. I mean, looks great. New all-time high. Good job. Good job, S&P. NASDAQ finally broke out of our little ascending triangle, breaking out here. Still expecting the measure move to the upside. Still in a nice little play right here. Obviously, they cross-head you back into this play at 13,723. Off of that, we've gotten another $1,000 move to the upside. We are putting in some potential bearish divergence here. Still looks good. I mean, look, let's be real. The indexes are going to keep melting up. This is where you start to see a little bit of a difference taking place with the Russell. Russell obviously much weaker, just going sideways inside of this pattern. It's basically, it's just consolidating at the top of the range. So what's going on here? Well, I mean, realistically, you could say it's consolidating before the breakout. I would say it's probably distribution taking place. But the truth is it could go in either direction. If it breaks out to the upside, the measure move is 2,569. If it breaks to the downside, that would be our 236 and measure move of 1,900. So we'll just wait and see. Obviously, Russell is trash. It's full of trash companies. It's the trashiest of all the trash. Uh, obviously we went into a consolidation period here, got the cross to the downside, and then broke down from the 200 moving average. That's starting to look like what took place right here. Got to wait and see, but this looks very toppy, and it makes sense that this is basically like there's too many companies in this for it to be strong when the whole market isn't strong. The breadth of the market right now is absolutely pathetic. A couple of stocks are like holding everything up. So XLB, so just going into our sectors now. Material sector here, getting that measure move. Still expect a little bit more of a push to the upside, but already got the majority of it. Still looks good. I mean, I mean, as good as anything could look at these levels. XLC communication, again, looks good. Still pumping up here. We're seeing some divergence take place, week after week. But again, same thing. I mean, I'm not going to sit here and try to call the top every day on these markets when, we've basically just been melting up for like a year and a half at this point in time. Like, there's only ever going to be one top. Let's just wait until the market shows us where it is, and then we can go from there. XLE, energy sector, again, came back down here, retested that support level, got the hard buy signal coming out of the bearish control zone. I still expect it to come up here, potentially put in left shoulder, head, and then like right shoulder situation. We could easily just break out here. This is obviously a massive underperformer. I do still have a target up here at like $74. We'll see if it gets there. I mean, we'll see. It depends, I mean, a lot on oil. So, and I mean, maybe this green energy push starts coming back in. Maybe like Biden and the Dems pass like their like $100 trillion infrastructure deal. I don't know. We'll see. I think a lot of the reason they're trying to get this bipartisan deal is that they're essentially trying to like coax the more conservative of the Democrats that they don't have to vote for like the siesta spending package of like $10 trillion. And like I mean, do we want to officially be like socialist country? I don't think so, but I mean, we'll have to see. Apparently more people, or at least quite a few people, want to go full socialism. I mean, I look at Cuba and say, hey guys, maybe it's not a good idea. But I mean, most of these people are like wearing Cuba shirts and like saying Fidel Castro, hooray. Meanwhile, all the people in Cuba are getting like murdered and leaving and coming to the United States. But hey, they don't even have to come here anymore. If we just make, go full communist or like go full like socialist, or we could just turn the United States into Cuba, and then they don't even have to come here anymore. Maybe we can go there. Maybe we won't even be that bad in comparison. So we'll have to see. XLF, financials was looking weak for quite some time. Consolidated, now got like that crazy gap up. Does it just put in a lower high here? I don't know. I mean, if we look at all these charts on the weekly, I've showed these enough times. They're basically just like trying to save these moving averages, but overall don't look strong. Is this like that final like hoorah push up to try to like not sell off? Probably, honestly. XLI industrial, this is just that same chart basically, that we've been looking at. It's operating inside of this channel for, months and months and months. This one here specifically is back to the March 2020, and then when we zoom out, we basically have one going back to 2009, after like the financial crisis crash dealio. We've been operating inside of the top of the channel like the whole time, getting rejected at the resistance of that channel the whole time. And now here we are, basically approaching that resistance again. So as far as I'm concerned, there's probably still some more upside, but more than likely see higher amount of downside or higher probability of downside. XLK, tech is strong, all-time highs, looks good. Potentially putting in some bearish divergence, losing the slope line right here, but this, it's a melt up. This is what happens in a melt up. XLP, consumer staples, Back at the top of our channel, we basically just been consolidating inside of for months, trying to break out from here. We'll have to wait and see. If it's going to break out, I think a breakout from the top, but it could easily be putting in like a situation like this, just like it did last time. XLRE, little bit of that real estate. Again, same thing, at all-time highs, closed a slightly bearish candle here, but as far as I'm concerned, we came back down, retested our breakout, and it's probably just going to float up. We're putting in some very clear bearish divergence here. We have broke down below the slope line. Again, I mean, it's a melt up, so I don't know. I mean, I wouldn't be surprised if we find out later on that there was like some extra shady stuff going on behind the scenes, because like who's even buying at these levels? I don't know. I mean, maybe it's just a massive short squeeze. Maybe it's just all options plays. I have no idea. It probably is. But XLU, utilities, retesting at all-time high, slight rejection. Actually, I don't think, is this all-time high? Well, cycle high. I think we're going to break out from here. We're almost at that measure move. We'll probably run into some resistance up here at the heart line, but I mean, let's be real. This one's another massive underperformer, but finally finding some strength here. More of a safety play. XRT, retail, looks extremely weak. Basically just barely hanging on at this point in time. It's a bullish pattern. It should break out to the upside, but it looks pathetic. Just hanging on to the 8, getting the hard sell on the weekly. All red histograms. We're below the slope line. I mean, if there's one thing that looks weak that we've just looked at out of all these sectors, it's retail. So why does retail look so weak right now? Well, no more stimmies, or less stimmies. XLB, healthcare, hit our target almost perfectly. I would have liked it see it come up here to the 2.618 at 135, but we got up to 134.53. So is that good enough for me? Yeah, I mean, it hit our red box, hit our sell zone. It could easily have a heavy retracement right here, but it'll probably just melt up. Healthcare, especially if everybody's got to get their like third little prick and everything, and yeah. I'm sure if we socialize healthcare, it's probably just going to drive up the prices. So healthcare sector is probably going to kill it. That's probably one of the best charts there is. XLY, consumer discretionary broke through that key resistance up here, came back down. It did not hold the resistance after it broke through it as support, which is what I like to see. So when it broke back up, put in a new all-time high, I think this is probably going to fail. I don't like to see a breakout and then a failure to confirm the break of resistance as support. It almost always sells off, comes up, puts in a new all-time high, and then fails to rally from there. So we'll have to wait and see. There's definitely some clear bearish divergence taking place on the daily here as well. Consumer discretionary. XTN transportation. This is a leading indicator for the market. It's funny too, because I look at one of these things and then all of a sudden everybody and their mom all of a sudden is pulling up transportation, talking about it. I don't know if I'm just more popular than I realize, or if I'm just ahead of the game by a month or something like that. But all of a sudden I see everybody pulling up all these things and saying all the stuff we've been saying for months in this channel. So I guess maybe we are just ahead of the game. Or everybody just regurgitates the same stuff, and maybe they just come here and hear it with their secondary accounts, so nobody knows that they're watching me. XTN transportation broke out of that channel, started to get our measure move to the downside. I expect it to find support at one of these key levels. It could easily sell off heavy though. I'm not going to try to pick the bottom. This looks like a bearish consolidation taking place. We basically have sold off and are going sideways while the oscillator comes back up to the top of the range, at which point in time, once it's all the way back at the top of the range, it can sell off again from the top of the range and then get that momentum to the downside. So people argue that we're inside the bullish control zone. This looks good. We're getting ready to push up here. It looks more like we're exhausting the oscillators back to the upside, getting ready to sell off. So, but again, we'll wait and see. This is very often a leading indicator. We have lost the slope line. We have all red histograms. We got the hard sell coming out of the bearish control zone, bullish control zone. I'm sorry. This looks very bad. Very bad. The moving averages will tell us the same thing as well. Jets, just telling the same thing, just a smaller portion of the market. Broke down from the 200 exponential and simple. But you hear about all the airlines canceling flights, reducing flights, having trouble getting staff, whatever, et cetera, et cetera. Hail, same thing. rental car industry is having troubles now. They sold off all their rental cars trying to speculate on what was going to happen. Then the economy comes booming back, and now they don't have enough cars. So how's their business going to boom if they don't have cars? So then they step into the used car market, try to buy up all these cars, and then meanwhile, they drive up the car market. So all the used cars prices are going through the roof. Everybody thinks all of a sudden everybody wants used cars, but really there's just not as many new cars, and they're buying all the used cars. So it's causing basically like inflation temporarily, and then eventually once the bottleneck is relieved, once they bought up as many used cars as they need, once other people stop speculating on used cars or new cars come back online, what do we expect to happen? This to sell off. It's already just been going sideways now for months, back from February. So it has essentially wiped out all of its gains for the year, and I expect it to continue to wipe them out. UPS, same thing, double top right here, gap down, trying to find some support, trying to push back up here. We left the gap back here at $179, and we're probably coming back to fill it. I would expect it to act as support, as that's our 200 exponential and simple. But, UPS looks terrible, and they also said that, demand is falling off a cliff, like their prices. FedEx, same thing, back down here at the 200 exponential and simple. We have basically at this point in time wiped out gains back to October of 2020. We're at resistance, and we're at the extreme top of this channel that basically we have been operating inside of for literally, ascending broadening wedge that we've been operating inside of since, technically we entered it in like 2014. So we put in a bottom support, resistance up through this range, support through here, and now here we are bumping our head twice on resistance right there. So, are we going to come all the way back down to the bottom of the range? $110? I don't know. Is it possible? Yep, definitely is. Look at the monthly. We're in the bullish control zone. We're losing all momentum. These are basically almost caught up right here. So if we see a downturn, it's going to be bad. And then we have now 2 red histograms on the monthly. So unless this starts to rally back up here on our monthly, FedEx is going to start looking real bad real quick. It already looks bad, but it's going to look real bad. Crude oil, we got that breakout from that key resistance at $66, started to go parabolic, hit our measure move, hit our price target off of that ascending triangle, came back down, retested as support, put in a lower high. If we hang out here long enough, we're going to break back down. According to Kathy Wood, we'll be at 11 or $3 very soon. I don't think that's going to happen, but it definitely looks like we're potentially putting in a topping pattern right here. So, would I count on $3 a barrel oil? Probably not, Kathy. Probably not. Velocity. This is another one of those charts. I don't have to look at it anymore because now everybody else is looking at it. That's our Bitcoin chart. All right. Knocked out all those bad boys. Let's just jump into our tech and friends. Tesla. So we have this giant descending triangle. We're putting in a high, a lower high, and now potentially another lower high. We can see here we got the TJD master on here, and we can see very clearly that we were in a bull market. We're in a bull run since $50. So maybe you just bought after that breakout at $57. So if you bought at $57 and then you sold at the cross down right here, you got in at $57, you got out at $781. I'd say you did pretty good. Could have got back in at $675, could have got back out at $705, and now it's telling you you no longer want to be in. The moving averages have flipped over, and Tesla is in a bear market very clearly based on our cross of the 200 exponential and simple. So is Tesla going to the moon? Probably not anytime soon. Sorry, Elon. Maybe SpaceX will go to the moon, but like literally with a rocket, not with its price. Oh, you know what? I wanted to look at this on the weekly also. And this is another massive warning sign on the weekly. So Tesla went absolutely parabolic and then went into a multi-year sideways consolidation pattern from May of 2016 until, technically somewhere in this range when we cross back above. So, 3.5 years it went into a consolidation pattern. So does Tesla have to go to zero? No. But is it getting ready to potentially go into a 3-year consolidation pattern? Maybe. Better be careful. We got the cross back down here. Tried to save price action right here. So let's see what happens. But, we got a very powerful resistance at $780. And, I hear all the Tesla bulls coming back out of the woodwork, talking about how it's, going to $1 zillion. Let's calm down, guys. Airbnb. You know, potentially that little scalp play taking place here. Looks decent for a pushback up to potentially like the 0.5, but still very bearish. You know, essentially just pulled all the way back to 886, bounced it a second time. So the key here is, realistically, do we take out this high at 155? And if we do, we shoot straight up to like 163, which is going to be very hard to get through. Or do we come back down here and retest this? If we retest this low for a third time, we probably break and go to new all-time lows. Uber got a nice bounce off the 528 moving average. We before that bounced to 377 almost perfectly before that little like gap down sell off. Now we're coming back up to retest it as resistance. I would expect it to act as resistance. You know, we put in a high and then we put in a series of lower lows. I expect it to continue putting in lower lows. We're now below the 200 exponential and simple moving average. Uber looks bad. Pinterest, you know, and when we look at all these individual stocks and all these big gainers and popular names and like actual companies and even companies that don't make products or aren't profitable but have big names, they all look like shit, but like somehow miraculously the indexes are still like making all-time highs and doing well. But what are the indexes made up of? They're made up of all the shitty companies. So I mean, obviously something is doing good and making it look like everything else is doing good. But when you really break it down, you really start looking at these things, something's not adding up. So Pinterest, you know, basically, yeah, I mean, we've seen this chart plenty of times. We killed it on that 32% move, took profits at the top of our range, broke down, bounced the heart line support, came back up, put in another lower high. So now we have a series of lows, low, and then we're probably going to put in another lower low, and then we have a high, a lower high, and another lower high. So again, probably coming back down here to tag our fib level at $50. Maybe even coming down a little lower and fill this gap back here at $45. But at this point in time, Pinterest has wiped out its gains all the way back to October. So the last year that you spent in the stock was for nothing if you didn't take profits. Next we have Wish. Wish is back down here at, you know, essentially it's low. Try to bounce up. It looks absolutely terrible. Looks terrible. If we find some support here and try to push back to the upside, do we get back up to like 1169? Yeah, probably. And then we probably just get rejected and keep going down. This does not look good. Vodafone, nothing really changed here. We're trying to cross that 821 back to the upside. There definitely could be a scalp in play here up to like 1750 or something like that. We got a little blue slopey slope over here. We're inside the bullish control zone. Definitely some potential for something going on here. Maybe like a little 10% move to the upside. I'm not convinced that there's anything really here right now. Maybe if it comes back down, gets a retest. I mean, I think it's going to be real tough to get back above the 200 exponential and simple, but yeah, maybe get a little 8% out of it. I don't know. It looks terrible. There's a million other things that look way better. Bumble had a nice play on that one, but now here we are just back at the bottom of this ascending triangle. If this holds long enough, I think we get the move back up here and we could scalp out another like 20%, but it's going to be very, very difficult to break through this resistance right here in blue at like $57. I think more likely than not, this thing's going to probably fall out of the bottom, but the truth is it probably just bounces around inside this for a little longer before it decides one way or the other. Okay, so Baidu, I got the TJD master on this one. Just kind of take a look at that. You know, obviously we can see we are now below the 200 exponential and simple on the daily. This thing is starting to look bad. Well, it has been looking bad since we got the 821 cross back here at like $285. Since then, it has basically lost like 40-something% of its value. But when we start switching this to the longer terms and start looking at what's going on with China, this start looking real bad, real bad. This looks great from back here at $15 in 2009, and you know, has a nice little bear market consolidation, another bull market, nice little bear market consolidation, a bear market massive sell-off capitulation, down from $2 to $85, 250 to 85, comes back up here, tries to get back above here, and then now look, it flipped the slope over slightly for a little bit and then broke down from it. It has now lost its weekly 200 exponential and simple moving average. The slope is to the downside, and it looks like it has some definite further downside potential here. Baidu looks bad. Broken back down below the 8 and 21. They're going to cross eventually, getting the hard sell signal. All red histograms on the monthly. I mean, what is this telling us? Is China just, you know, the canary in the coal mine for all the world markets? I mean, look, if China looks like this and they're the one making all the stuff, how are all the other countries going to be looking here pretty soon? Probably not good. Hopefully they don't stop selling us the stuff until after we run out of money to buy the stuff, or else we're not going to have any things. Oh no, we can just all service each other. We're consumers, but there's nothing to consume. Alibaba, again, looking very bad. Switch back over here. Are we getting ready to do one of these? Yeah, I mean, we're already doing one of those. Looks bad. If we switch over to the weekly here, again, broken down from the 200 exponential and simple. They're going to roll over. We're going to lose the slope very soon. Alibaba had us out at 270, and now here we are at 200. Did we bottom? Probably not. We probably got a reaction rally to try to save the 200s. And now we're getting an indecision candle, potential rejection on the weekly. Yeah, looks bad. Oh, whoops. I'm about to look at the monthly real quick here. Yeah, we just got the confirmed cross for the first time on the monthly 821. We got the cross to the upside back here at $83. So you could ride it from $83 to 224, and now from 224 back down to zero. So yep, Alibaba probably not actually going to zero, but definitely looks bad. It's going to zero until it doesn't. It's headed to zero, but it's probably going to stop somewhere along the way. 10 cent, same thing. Looks absolutely terrible. Lost its 377 and 528 moving average. You know, I'm buying the dip. Not really. Not really. Sorry. I mean, when Kathy Wood gives up on something, you know it looks like shit because she's always late to the party. Bouncing the top here. That was a key support. If we hang on to this level, maybe it can rally. Maybe it can save itself. But the 821 have crossed the downside. This looks more like a reaction rally to me on 10 cent. I mean, the last time this happened, we saved the 821 cross and continued to the upside. So maybe we pull it off. But if not, I mean, we're going to like 342. This could just get absolutely wrecked. Let's just hope it doesn't, because it's probably real bad for the world, for just everyone. Diddy, you know, basically broke down from a key level, broke down from support, came back up, retested it, got rejected. Can't even get back above the 8 moving average. Probably going much, much lower. BZ, you know, this one's trying to hang on here. It actually looks decent. Same deal. It broke down from a key level, came back up, got rejected, broke down to a new low, came back up. Is it going to get rejected again? I don't know, probably, but it looks stronger than the other ones do, but it's probably just going to capitulate. It's just waiting. NEO, by far the strongest of the Chinese stocks. This thing is hanging on pretty nicely. Still has basically maintained its support from the 200 exponential and simple moving averages. If we flip over to the weekly here, we're trying not to cross that 821 to the downside, but it looks very weak. When it does break, it's going to be bad. Retest our low back here, and then maybe like the 89, like $30 or something like that. But if we break down from then, you know, then we start looking at like key fib levels. I had this thing easily coming down to like, I mean, anywhere from $8.12 to $18. I mean, we'll have to see. We'll see when it gets there. You know, maybe it bottoms out down here, hits our target like 25, and then we get some upside potential. We'll have to see. You know, I think a lot of these EV plays got way ahead of themselves. Same with like uranium. Same with like all the commodities. Like, had a nice run, guys. Hope we took profits. TSM, Taiwan Semiconductors. Again, this one looks like it's just waiting for that capitulation move to happen. It just hasn't happened yet. Intel. I mean, when we look at this on our longer time frames, it looks like it's about to get absolutely wrecked. We have triple bearish divergence on the monthly and cannot get above our previous all-time high. And we basically have gotten rejected at the 886 multiple times. We're operating inside of this channel, but I have a feeling that we're going to 35 bucks on Intel. That could easily change, you know, if they get some of this like government money, some of that government money, start building factories in the United States, take over the semiconductor world. But let's not get ahead of ourselves. It hasn't done anything in like 20 years. So when it goes down for 20 years, it's probably not a great place to put your money in if it still hasn't reached its all-time high from 20 years ago. I mean, you've been better off like investing in XRP. NVIDIA, you know, all-time high here, came back down, found some nice support, saved the 821 cross, came back up, basically back at the all-time high. Is it going to put in bearish divergence, or is it going to get continuation? I don't know. We'll have to wait and see. Looks very strong. You know, very, very likely could continue cruising up here. I mean, we'll have to wait and see. I think we had targets up here for like a potential top. I mean, who knows? This thing could really run. Nvidia looks good. Looks real good. Definitely one of the stronger plays. Um, AMD again. This was like a meme stock short or meme stock play right here. AMD is obviously a good company and does stuff and things. But I mean, what was this? This was clearly like a Reddit pump meme stock deal. It's got rejected. Got a very bearish looking candle. Got another very bearish looking candle. Probably just going to head down and start retesting some of these key areas. But, that was a real nice breakout from $99. Got a nice push up, like 20+% move to the upside. So what do we want to see? We want to see it come down and find support somewhere above $100. So anywhere above $100, if it finds support and starts cruising back up, it will look good. But if it does not hold the support, it would just look like a meme stock pump. Zoom. Zoom has broken out, found support, tried to come back up here, got rejected again. I mean, it looks like it wants to go, but after that breakout, I would think that it would get follow through. Have the trade set up in play here, but I honestly don't. It looks bad. I mean, the longer it just goes sideways to down for, the worse it looks. I mean, this is basically us trying to save that 821 cross right here and confirming a breakout. So if we cross 821 back to the upside and break out of a key resistance area, I would expect a nice, powerful move to the upside. Instead, we're getting like a little pathetic pump like that and probably coming back down low. So again, after that long of a consolidation and breaking through key levels, I would expect follow through, and it's not happening. So Peloton looks bad, came all the way back up here from that all-time or that new low back here, retested the previous resistance area, double topped, and now it's selling back off. Very bearish looking candle. I'm surprised it got this much of a move to the upside, but falling short off that 786 and just getting like essentially like a double or triple top at the 618 just tells me it's probably going to come back down here. I would expect it to find support at like 95 bucks. It really needs to hold on to $95. Then maybe we look like in a little inverted head and shoulders pattern and we get a breakout back to the upside. But if we lose that area, it's going to look bad quick. ARK, ARKK. This one, I got the TJD Master on. Let me know, too, on the stream if it's easier for you guys to see when I have, like, the Master on versus, like, all the moving averages. Because I know people talk about how, like, it's a little complex, especially if they're, like, newer to the game and there's a bunch of stuff and it can be a little much. I think this really just, like, simplifies the chart. But we can see here very clearly that, the last time this happened, we went in a massive bull run on ARK from 2016 up until basically like 2018, started showing like a topping potential pattern as the 200 exponential and simple cross. We then went sideways from April 2018 until basically April 2020. So 2 years of sideways action. And now here we are getting the cross here while we're clearly getting rejected at a key level and clearly putting in, lower highs. So are we getting ready to go into a 2-year consolidation pattern? Did we just wipe out an entire year's worth of gains? Like not a year at a time, but all of 2021's gains? Yes, we did. So, I mean, we'll have to wait and see, but definitely does not look like I want to park my money here for the next 2 years while it goes sideways or down. But again, there's still potential left on this. Also potential for, like an inverted head and shoulders type pattern to play out here, but we'll see. ARKF Innovation ETF, again, same type of deal here. We basically went into a nice bull run, capitulation move, came out of it, make nice bull run again, and now here we are losing momentum at the top of a trend. This is obviously underperforming, and again, we have wiped out what amounts to an entire year, like this entire year worth of gains. It's basically just gone sideways to down. So, and then the poor people who actually bought this up at the top up here at like $62, I mean, only down like what, 15%. It's not that bad. It's not that bad as long as you believe in Kathy. Skills. Okay. So, I mean, this looks terrible. and broke out of a key level here, topped, came all the way back down to that 886 level, trying to find support. I mean, this should have found support before here. I mean, maybe we find support right here and we get a bounce, but like 15% to the upside. But I mean, this just looks like absolutely wrecked. Absolutely wrecked. The 821 cross, this is a horribly bearish weekly candle. It probably gets a bounce this week, maybe like 15% up and reject it again. It looks absolutely terrible. I mean, Teledoc. No wonder Kathy's funds look so terrible. They're loaded up with like the worst charts. Teledoc looks terrible as well. I mean, much better, but still, I mean, 821 have crossed the downside. It looks like it's just dead cat bouncing like the 200s. Trying to do something here, but let's be real. It's probably coming down to like $87. That was a key breakout level. I mean, maybe we find some, yeah, I think like $90 looks very likely. Very, very likely. It's a 618. It's also like the previous all-time high before the breakout. Again, this has just, at this point in time, it's wiped out gains all the way back to March 2020. And just showing only weakness. Only weakness. Boom, 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 boom. Markets look good. Not. Oh, CRISPR, again, putting in new lows. Again, we might get that little bounce back up here to retest the breakdown area, but I expect this down at like $22 or $18.85, $19. We should find a decent amount of support at like $22, $23 here. But I mean, this thing is just rolling over and dying. Apparently, like things that are cool that are also investments are probably not that good when they start being not cool. The 821 crossed the downside at like $33, and it's literally just sold off since then, and it'll probably just continue to sell off. It's putting in new lows, and the 821 on the weekly are across the downside. It's in the bearish control zone, and it's all red histograms. So it's a buy. Not. It's an inverse buy. Unity Software Inc. Another one of the requests, below the 200 exponential and simple moving average, trying to put in a little bit of bullish action here. Could it have bottomed off the 786 retracement? It's definitely possible. I think more likely than not, though, this is just a reaction rally. I mean, I would expect this thing to come back up at least to like 120, try to push back above the 200 exponential and simple. Maybe it gets up to 138, but I mean, more realistic than not. I mean, maybe this just bottomed here off the 618, and that was like our first in a series of higher lows, but it's just looks terrible to get bullish on this thing. It's maybe it crosses at 821 back to the upside and starts looking good right here. It's got potential. It's trying to decide at the 0.5 right now. I could easily see it getting a push back up to like 120 or 138, but again, is this just a bearish reset? The indicator oscillator is like pushing back up to the upside while it basically just goes sideways. I mean, here the indicator is all the way at the bottom of the range, and here the indicator is all the way at the top of the range, and the price is basically the same. There's obviously some oscillations in there, but we're at the same level. So that to me looks like a weekly bearish reset. So it sold off a ton, got a reaction rally back to the upside, and it's just refueling for the next move further down. Further to the no downside. Oh. All right, Etsy. Again, like this one looks a lot like the Zoom chart. Try to get that breakout of our channel. But what is it really? It just looks like basically we came back up, tried to double top, and now it's getting ready to sell off. If we turn off the moving averages here, we can see clearly like, we broke out of a key level, found support, put in a higher high slightly, came back down, put in a lower low, trying to find support again. If we hang out here long enough, maybe we get a reaction rally, maybe we get that measure move. But I mean, when we switch over to like the longer time frame, this is just going to look like it's just rolling over. That was like our attempt to cross 821 back to the upside, and then it just got a massive rejection, and now it looks like it's headed down probably to $143. Looks bad. Square retesting the top of the range. That was a nice little pumpy pump off of the purchase of, what was it, Afterpay or whatever. It's like they're bringing back layaway. I remember they had that in like the 80s and 90s. So I guess like layaway is cool again and it's worth like hundreds of billions of dollars to Square. I don't know. I really don't know. Looks like it's triple topping the top of the channel. We've been operating inside of this channel since December of 2020. I would expect us to continue operating inside this channel for as long as it takes until we don't. Maybe we're going to break out this run overall at all-time highs. So I would say looks way better than just about anything we've looked at tonight. eBay got that nice breakout of the ascending triangle, came up here. We did not like this move where we failed to maintain support above the breakout point. We want to see a breakout, a retest of that support that we broke through, or that resistance that we broke to, act as support, and then continuation. We broke down from it. I don't like to see that happen, so I did not enter this position, and now here we are right back down at it again. So apparently someone else thought this was weak. Maybe if it holds this time, I'll get interested in it, and we can make a move back to the upside. But the truth is, the daily 821 are crossing to the downside. I mean, it looks better than most things do, but still does not look great. PayPal got a nice move off PayPal, over what, about 18% to the upside, and now here we have topped out. You know, this is a nice little scalp, maybe back up here for another 9%. I'm not in this right now. I'm waiting to, not in my trading account. I'm waiting to see what happens with these. You know, this is a key area I would expect support to hold at. This was previously resistance like 1, 2, 3, 4 times. So if this holds as support, we could easily just head back up to new all-time highs. But this was based off of like their bad earnings or less than ideal earnings, which doesn't surprise me because eBay like dropped them. Snap up here at all-time highs, consolidating after that crazy gap up. Nice little gap up, like what was that, 20%? Yeah, almost 20% gap up to a new all-time high. So, I mean, I don't know. Is it just going to leave that gap or is it going to come back down and fill it? I mean, it looks strong. Looks stronger than just about anything else we've looked at. Apple, same thing. Looks extremely strong. You know, this just looks like it's flagging out at the top of the range at all-time highs. I expect this thing to continue to the upside. But again, if we look at the TJD Master on here, you know, we just got to be careful because this was like a topping bearish consolidation, went into a bull run. This was basically a false signal or a consolidation. But, you know, what did it keep you out of? You know, from November 2017 till August 2018, it kept you out of basically a year of sideways action before a little push up into like, you know, what amounts to a pretty massive dump here from the top back down to like 40% sell off. After that, went into a very nice, you know, bullish move to the upside. And now here we're losing strength at the top of the trend. So while we are at all-time highs, you know, this is definitely showing some weakness as we're losing momentum at all-time highs. And then again here, this is on the weekly. You know, we've been talking about this bearish divergence on the weekly, and it takes a long time to play out. So sometimes people forget about it, and then all of a sudden they just get wrecked. Well, look, we have a high here. We have a higher high here, and now we have a third higher high. And here on our indicator oscillators, we have a high here, we have a lower high, and we have a potential rejection at the negative slope line with the histogram, which happens over and over and over again, where if it's blue, we find support like we did right here. If it's red, we find resistance like we potentially will right here. Is it possible we blow through this and just continue to new all-time highs and, you know, invalidate this triple bearish divergence on the weekly? It is 100% possible. But, I mean, this thing's like holding up the whole market, and the chart doesn't even look that good on the weekly. Daily and monthly still looks great, but the daily is obviously losing strength, so maybe it's just consolidation before new all-time highs and we invalidate that bearish divergence. Amazon, you know, basically like top beneficiary of the market, and now here we have wiped out literally back to July of 2020 levels. So over an entire year ago, if you bought Amazon at the little tippy tip right here or anywhere in between, you are now officially like flat basically. And again, best performing stock in the market like this entire year, top, you know, in the indexes, and here we are losing steam at top, and obviously got a, you know, a sick gap down. What was that, over 10%? Well, 7%. I guess it's not that bad. 7% gap down here. I mean, if Amazon's not going to be a winner, what is? What is? Still looks decent here, but again, putting in some bearish divergence, getting rejected at the red slope line, just like I was talking about with Apple. It looks like it's basically just getting rejected and putting in weekly bearish divergence. And this is Amazon. It's supposed to be the winner. Facebook looks decent, hanging out here at all-time highs. You know, it's too early to tell, but maybe putting in some daily bearish divergence. Facebook looks fine. It really does. I mean, it had a little like chop session through here. You know, same thing. Last time it did this, it was in like a nice bull run, got that little funk, and then had one more little push up in blue to a new all-time high, put in a lower high, and then went into our like CVD capitulation. So now here we went into a bull run. We had that little, you know, divergence signal pop up here, little false alarm, like we're losing momentum. So do we just push up here, put in a lower high, and then capitulate? Possibly. But again, still looks good. Google looks better than just about anything else we've looked at. Looks very good. There's a bunch of red histograms, so I'll just go sideways. Looks like a bullish reset to me. Google looks like it's going much higher. Netflix has just been going sideways for eternity, over a year in this sideways channel. While it completely loses momentum, it has flipped over now and is barely hanging on to its 200 exponential and simple. So, I mean, look, it did the same thing back here for, you know, what it amounted to from March of 2016 until it finally broke out the top of the channel in April of 2020. So it went sideways for 4 years and then broke out to a new sideways consolidation. So, I mean, do you want to hold this for 4 years while it just goes sideways again? No, thank you for me. But, you know, last time this flipped over red, it sold off pretty freaking heavy. So, 30%. So, I don't know. Is it going to have another 30% and sell back down to our blue support line right here? 20%? Yeah, probably. I mean, if it breaks out of this channel, we would just expect the measure move to be the distance from the top of the channel to the bottom of the channel, or vice versa if it breaks out to the upside. But overall, neutral pattern. You know, the real question is this accumulation taking place before the breakout, or is this distribution taking place before the breakdown? You know, breaks to the downside, $360 price target. If it breaks to the upside, we'll just take that same move and turn it a different color. It's much more cheery, much more bullish. And we can have a move all the way up to $674. Hooray! But I don't know. Maybe Netflix comes out with some new special and people, you know, get their Netflix subscription back up. I have no idea. So yeah, that is it for our traditional markets. Now let's look at our cryptocurrencies. I'm going to take a quick drink and see what's up. Hey, thanks for everybody that is still here for our asset technical analysis. Make sure that you like and subscribe if you're new to the channel, but I assume that you are all my regular peeps, all my homies, all my fam. So thanks for watching. And just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Refreshing. So normally I give precedence to the futures chart over the spot market because it gives us less false signals. So in this case, obviously, the futures chart had us out at 58,350 with the TJD Master and had us back in, you know, over the closed session there at 33,530. Looks bullish still on the daily. We are still well above the 200 exponential on simple moving average. So obviously looks better than spot markets. Getting up into our resistance areas. Potentially futures wants to go up to like 47,000. It looks like something like that. I don't know if we're going to get there. Maybe we do, maybe we don't. Does this end up just turning into that giant head and shoulders pattern that everyone forgot about? I don't know. I think the longer we go sideways here, the more likely it is that we go up. But at this point in time, you know, we don't have a ton of history on the futures chart, but very clearly, once we lost the slope line on these, we were very clearly in a bear market. You know, once we got that, like, what was it, N1 coin or whatever, that plus token Ponzi scheme, you know, we went back into another bear market. This was the CVD bear market, and then this just had us in a very nice position from 9,000 until out in at 9,000, out at the head and shoulders at 11.6, in at 10,600, out at $57,000. So you could literally tell your kid to buy when it's green and sell when it's red. And even a child could make 430% trading with this basic strategy. So again, back in the trade from here. Do we get continuation? Do we see further upside potential? Only time will tell. And I mean, the weekly chart's basically like, I mean, we can look at it. We don't get our long-term moving average uses, but we can still get the short-term. Obviously, the weekly, when it crosses down, very nice move to the upside. Nice little sell here. Nice little move here. Gets us out before that capitulation dump, which is always nice. Gets us back in for this nice move here. Gets us out for, well, the weekly on this one, obviously, would have just kind of left you, screwed here, honestly. Because you would have actually sold technically at like 37,000, and then you technically wouldn't be bought back in yet. So we'll have to see. But if this crosses back to the upside, it's going to look bullish. We're leaving the bearish control zone. We have multiple green histograms on the weekly. Looks like we're getting ready to get the hard sell signal. Looks bullish to come back up here and at least retest 50,000. That's the spot market. I'm sorry, that's the futures market. And then I'll just do a quick little refresher on our traditional Bitcoin chart. This is, obviously we got to be real careful here because let's just look at our little cycles here one more time. This was our first 4-year cycle. We broke down from our 200 exponential and simple moving average. We came back up and retested the 200 simple and got rejected, and then went into a over 1 year bear market and sold off roughly 77%. So 77% in 1 year, at which point in time, once we flip back to the upside, we got us a 5,864% gains. All you had to do was just stay in the market while it was blue. And then once we got that cross back here to the upside, put in a lower high, we'll notice once again, we broke down below our moving averages, attempted to come up once again in 2018, got rejected here, came up, got rejected at the 200 simple moving average, at which point in time, we then from that point down to the bottom of our market, assuming you just ate that dump because you were just bullish and you bought bags and you ate a 68% dump from that point in time and over a 1 year bear market, at which point in time we broke back above them. And then depending when you got in, what time frame you were looking at, basically got in for a nice little pumpy pump back here, assuming we bought at the blue slope line, and then assuming we sold at our, well, any one of these, we could say back here off the rejection, you could say at the cross, 46%. You could say that you sold this gigantic descending triangle, whatever. That's what I did. But regardless, kept you out of our COVID dump as it was still red all through this right here. Oh, I said the bad word. And then once again, here we have our third bull market of the 4-year cycles of the entire life of Bitcoin. And now what are we looking at right here? Well, we got the 821 cross to the downside right here. We are now below those moving averages. We have come back up to the 200 simple moving average and we're getting rejected. So if we look at the last 2 times that we did the exact same thing, this was the beginning of our bear market and a year downtrend. This was the beginning of our bear market and a year downtrend. So based on those 2 examples, the only 2 examples ever of when we topped out, it looks like we're probably getting ready to go into a 1 year downtrend and, another like 60% sell off from where we're at right now. But fundamentals. Bitcoin to the moon. Come rocket. Hooray. Dogecoin. Because. It looks like the same thing it did right here. And then we sold off massively. Looks like the same thing we did right here. And then we sold off massively. Looks like the same thing right here. And we had a little baby massive sell off. So more than likely what's about to happen here, probably the same thing. We're trying to cross the 821 back to the upside. But, I mean, it looks bad. But, hodl. Because I'm a believer. Don't need to look at that one. We kind of look at this. Basically have like some volume divergence taking place here on the daily. Have some divergence taking place on the Fisher. Is it possible we just rally and go back up here? It sure is, but I think more than likely, this was This was the perfect rally back up to the 200 simple moving average off of triple bullish divergence on the daily. It's absolutely beautiful. Played out perfectly. Made anywhere from 20 to 40% on our Bitcoin plays, and upwards of 40 to 70% on some of our Ethereum plays. Actually, I think it was closer to 60, but let's not be too greedy here, guys. Wait for a little confirmation. The weekly chart looks like we're basically topping out here on the on-balance volume. Looks like we're trying to gain some strength here on the Fisher. Looks like we are losing strength to the downside, but far from being bullish here on the waddah explosion. And if we notice here, we get this giant green peak right here, and then we go into a consolidation bear market period, a nice green peak right here, and then go into a consolidation bear market period, and we obviously have a very large green peak right here, and then go into a bear market consolidation period. So I'm sure that all-time highs, because it sounds better, because clickbait, all-time highs, hooray. And our traditional indicators, stochastics, RSI, and MACD are all showing divergence between our last 2 points right here. Is it possible we keep moving back to the upside and invalidate that divergence? Sure it is, but it's probably probably just going to go down. Probably just already hit our target perfectly and going to go down. Weekly looks a little bit better, trying to cross the upside, losing some momentum on the Stokes, losing some momentum on the RSI, but the MACD looks like it's trying to get that cross to the upside. But again, this is the exact same thing that happened before, like the little bear market capitulation back here. So got to be careful. This could very easily just start selling back off here or get like a fake cross. There's just no reason to be in like the most volatile asset class when it's doing the same exact thing that it did every other time right before it capitulated. But hey, what do I know? Ethereum, took profits on my Ethereum trades. Still have a small position open here, but let's be real. If we look at this, what's going on with Ethereum on the daily, it's doing the exact same thing it did the last times it went into a bear market. This was our 2017 bear market. Well, technically 2018 because the alts ran a little further. We flipped over the red and purple right here and busted through them slightly and then got rejected and lost like 90% of its value. So is that going to happen again? I mean, probably. Maybe not as bad this time. Maybe only 75% of its value. Hard sell signal, leaving the bullish control zone, and the slope flipped over. That was a pretty nice sell-off right there. I can't remember. What did Ethereum lose from the top right here when we sold our $4,000 Ethereum to, essentially the bullish divergence buy signal back here? Like 50%, not even like tip to tip. So, you get twice as much Ethereum for the same price or the same amount of Ethereum for half the price. I'll take either one of those deals all day. And now here we are getting the hard sell signal at the top of the range, getting ready to leave the bullish control zone, just like we did right before the capitulation move. Possibly, maybe we get a little fake out like this, where this one just like sold off 22%. So I'll just stay on sidelines till after the 22+% dump happens. And then also, obviously, we got that cross already taking place. So it just doesn't look good right now. I mean, we got a nice move. Ethereum rallied like 60 to 70% off the lows. I mean, if that's not enough, no, more than that. From tip to tip, if you want to touch tips, okay, 85% from tip to tip, ladies and gentlemen. Let's not be greedy here, okay? We're below the slope line on the weekly. Histogram's still green, but that's where we get rejected every time. It looks like it wants to top out here. We avoided the 821 cross back to the downside, so that's good. Last time we did this, maybe we get a situation like this where we rally up and we're right here in the trend. It is definitely possible, but, maybe we're right here in the trend. We sell off, come back up, flip the slope back over green, and then go into our, bear market. And, in case people forgot, Ethereum at one point in time was worth $1,600, and then very shortly afterwards, it was worth $80. So let's not get too excited because all of a sudden we're staking Ethereum and it's all locked up and proof of stake. Hooray! And our Ethereum Bitcoin chart was also part of the reason that we knew Ethereum was topping out here, at least temporarily. This is our Ethereum to Bitcoin ratio. Very clearly, we are inside of either a descending triangle or a descending channel. Either way, We basically came all the way back up to resistance, got a hard rejection, a big thick wick rejection, pushed up one more time, could not hold it as support, and now we are back inside of our channel. Technically have broken out of the triangle though, so maybe we can consolidate here and Bitcoin like go sideways while Ethereum goes parabolic, but more likely than not, Ethereum is going to sell off bad and Bitcoin is just going to sell off less bad. But we'll have to wait and see. It is still possible that we see a breakout to the upside, and either one of those situations is fine. If we break out to the upside, Ethereum just goes up faster than Bitcoin. If we break out to the downside, Ethereum probably sells off more than Bitcoin. Is the opposite possible? Could we break out to the downside and Bitcoin sells off, but Ethereum sells off less? Definitely possible. Is it possible we break out, to the upside and the opposite happens? Bitcoin goes up more than Ethereum, so that chart would break out to the downside? It's possible, but much less likely. Uniswap got a nice move up here, got all the way above our 200 simple moving average. Looks much better than most altcoins, but then obviously has taken out the last moves up here with those last 2 days candles. Basic attention token, a little more pathetic or less impressive. Did not make it up to its 200 simple moving average. Dogecoin, still above the 200 exponential and simple moving average. Got a nice push up here. Did not make it back up to that previous resistance though. Did get the measure move eventually of the breakout right here. Got some nice scalps on all these trash bag altcoins. Polkadot, underperformer, got up to the 200 exponential moving average, did not even get close to the 200 simple, could not even break through that. Getting the hard sell signal, looks absolutely pathetic. I mean, still crushed it on these scalps though. Let's be real, still crushed it on these scalps. It was like, yeah, over like 40% on these. Okay, let's not marry these coins. Do you want money and stuff, or do you want Polkadot? I'd rather have money and stuff, okay? But that's just me. I don't know. You can just have all the polka dots in the whole wide world. Chainlink, absolutely pathetic. Made up to a 200 exponential. Could not even get up to the 200 simple. Underperformer. XRP, I mean, if there was such a thing as crypto going out of business, this is what it would look like. Failed to make a new all-time high. Actually looks technically better based on the 200 exponential and simple moving average. But overall, just absolutely pathetic. What a pathetic crypto. What a horrible asset. XRP, all-time high, January 2018, and then failed to make an all-time high again after this whole bull run. Of all the cryptos in all the world, which one is the worst? Which one is the shittiest? It's XRP. No, I'm just kidding. There's other ones that are shittier, but if you take its market cap and multiply it by its shittiness, I think it wins. It's pretty close, I think. Dash is definitely up there as well because it has a big market cap, but it's also very, very shitty. So I think XRP and Dash are probably the biggest pieces of shit. They have the biggest market caps, but they're also the shittiest. So that's it. Dash and XRP are the biggest pieces of shit if you're gonna measure it by like actual mathematics in crypto. So Pancake Swap. Again, stronger than most because it's still above its 200 exponential and simple moving average, but overall, like pretty pathetic performance from that 821 cross as it basically rallied. Well, it's about 40%. Still not bad. Got the measure move breakout. Oh no, not measure move. What was that? Yeah, I don't know. I think just lower high. If it gets back up here to that 0.5, I would be surprised. It just looks to me like a high, a lower high, and then, potentially just another lower high. It's definitely rolling back over here, too, on the daily. Doesn't look good. None of these look good. They all just look like they got reaction rallies because they were oversold. And Bitcoin was most of these were putting in bullish divergence on the daily. Triple bullish divergence. So, with the exception of Solana, did not actually put in triple bullish divergence, but only because this massive wick right here, it could have easily just gotten that rejection to the upside. But in all reality, basically it just got rejected at key fib level. Another lower high from that previous one. So we have a high, a lower high, and now a lower high again. So again, bearish. Looks like it's getting ready to sell out of the bullish control zone and sell off here. These all look like they have topped out on their reaction rallies. Cardano, same thing. Should technically it's stronger because above its 200 exponential and simple moving average. But again, Stokes are topping out here. It's starting to show some weakness. And I mean, what an underperformer of an asset right here. From the 821 cross, it got a 17% move. So it's half as good as like any other crypto that we've looked at, or twice as shitty. So, and if you see Charles, tell him I said, fuck you. Bitcoin dominance on the weekly, just consolidating above the 8, which is expected. We have a low way back here in 2018, and now here we have a higher low. Looks to me like we're getting ready to have a pushback to the upside. We got rejected pretty strong off the 21 and that nice little move, but all green histograms on the weekly, hard buy signal. Stokes are powerfully angled to the upside. We're back above the 8. I think we're going to test that 21 again at like 50%, and then eventually we should get a breakout up to like 55%. This is probably going to correspond with a new Bitcoin all-time high, or alts getting absolutely shellacked. The going out of business sale on altcoins. Everything must go. Blue light special, fire sale. Total market cap on the weekly, threw up the TJD master on this one. Still looks pretty good on the weekly, obviously in a powerful uptrend, but here we have flipped over the slope to the downside. This looks like a reaction rally off these levels. We did get that perfect measure move, or I'm sorry, Fibonacci level up here. No, what was it? Not Fibonacci. Oh, it was a retest of the breakdown. That was our support. We came back up and touched it perfectly. Got rejected at that level at $1.776 trillion. That's so ridiculous. Trillion is the new billion. Billion is the new million. And million is just like average. But yeah, total market cap. I mean, it looks bad. It's trying to find a rally right here, but it just rallied back up to resistance to retest it. It's probably going to act as resistance and reject it back down. We did get the cross back here on the weekly, but if we flip over to the daily on this, is when we start to get like more accurate picture of what's going on here. We went into a full-on parabolic uptrend, and now here we have gone into a downtrend. We're trying to save the 200 exponential and simple moving average, and we got slightly above the 200 simple, but it looks like we're probably going to get rejected. And when we do, it's just going to look like a high, and then a low, and then a lower high, and then probably a lower low. And crypto is going to be worth $760 billion. No more trillions. Wah, wah, wah. Looks like we're about to get the hard sell. Losing strength here. I mean, that was enough, guys. We did good. We had a good run. I mean, and if you don't believe me, what is this? This is 2018 bull market. We sell off. We get the cross to the downside. We save the cross to the upside. We're bullish. Everything's going to the moon. Oh my God, no, Jesus. And crypto loses 78% of its value. So what does that remind you of? We're going to the moon. Yay, hooray. Crypto is the new. Oh my God. Woo, we saved it. Oh, Jesus. Oh, no. So did we lose another 78% of our value from here? What will crypto's market cap be? And people are like, yeah, but it's not. It's different this time. It's never going to lose 78% again because crypto's great and it's awesome now and things have changed. Think about it. There's like 20,000 like shit coins now that do absolutely nothing. So pretty sure they could bleed out pretty bad here. So yeah, I don't know. Maybe we don't make it down that far. Maybe we just go down to like, I think we'd go to 539 billion. We'd go to a $500 billion. I think we'd say. And then when everybody else quits, I'll swoop up all their cryptos again. And then they'll forget about it and say crypto was a scam and it was a Ponzi scheme and all that stuff. And then we'll go back on our next bull run. So new all-time highs. Riot, I mean, it's just doing what Bitcoin does. Try to get a little breakout here, underperforming, series of lower highs. The only good thing about this right now is it has a low and then a slightly higher low. So maybe we can get a breakout to the upside. It's going to be very difficult for it to get back above $40. So, but I mean, that's like 20% from here. So maybe it does that. Maybe it does. Maybe it pushes up, but probably not. Coinbase trying to make moves here. We got the 821 cross back to the upside, took out that previous high. I mean, could this thing just go parabolic? Maybe it could. Next key resistance, maybe 282. After that, 302. Starting to look decent. Let's be real here. Got the 821 cross confirming above the 55 exponential for the first time. Yeah, could do something. Maybe. Old Robin Hood. Boy, did they get you guys. Maybe not you guys, but I mean, it looks like it's getting ready to just waterfall. I mean, this was before options trading. after options trading, and now it's going to get absolutely crashed, like wrecked. $46 probably going back down to. I mean, this proves that options is the only thing holding the markets up. Nothing happens, and then options trading like opens, and it goes absolutely parabolic, and then just bleeds out. So the meme stock of meme stocks. Once you were a meme stock platform, and now you are a meme stock. So good job, Robin. MicroStrategy. Speaking of meme stocks, high, lower high. You know, I don't know what's going to happen here. If Bitcoin keeps pumping up, it'll probably keep pumping up. 883 next target to the upside. Come back up here. It's going to be tough to get above that. We got a bunch of support turn resistance, and then obviously topped out there as well. But, I mean, look, maybe Michael Saylor, like, pumps it up again, talks about how good Bitcoin is. I don't know. I don't know, guys. I know what the Bitcoin chart says, and I know MicroStrategy is a shit company that's basically a Bitcoin ETF. So if Bitcoin goes down, I doubt MicroStrategy is going to go up. So GameStop, the old GME, hit our target literally perfectly to the top here. Literally wicked down to it. It's probably still going to keep selling off, but I think it was just another reflex rally. About to get the 821 cross the downside. This thing really needs to get above $170, or it's headed straight down to 135. And then after that, it's just going to stair step its way down until it's back at zero. I mean, GameStop is trash. Yeah, it looks absolutely horrible. But, I mean, it could be bouncing this area here soon. 200 exponential and simple. It looks like it wants to get a little bouncy bounce. Boing. Boing. AMC. Oh, no. The apes put in a new low. Why? Why would you do that? We were supposed to have diamond hands. Headed down here to our target at... I mean, the first target was 30. We hit that. Next target is 20... 5 and some change. We'll hit that next. And then eventually, you know, bounce maybe the moving averages. But we'll be down at like $17, $18 here pretty soon. It won't be long before the apes get gaped. Oh, man. These poor guys. Mom, I was going to move out of the ape basement, but the apes sold their AMC and they lied about diamond hands. And now I got to live here forever. Oh. Bed Bath & Beyond. Another meme stock coming back down here to retest the bottom of the range. $24. New egg. Nice little bounce here off of support. Perfectly hit our target right here. Perfectly hit our key support level. Pumped up to the top. Got rejected at the previous level. Look, literally that same rejection wick. If it gets above the 8, I think it probably moves back up to 22. Little 10% move to the upside. But, I mean, let's be real here. If we lose $17, this thing is going to 1075. So, I mean, I don't like those odds. You could potentially go up 10% or down 50%. So, I'll take those odds in reverse. Might be time to use some of them options to the downside. DraftKings, I think they did pretty good on their earnings. Had a nice little bounce up right here. Got rejected. High, lower high, lower high. Still looks absolutely terrible. This was like a pathetic attempt to try to get above the 21. If it consolidates here long enough and gets that move back up, maybe we can cross 821 back to the upside and this thing can re-enter into a bull market. But as far as I'm concerned right now, this was just like an oversold bounce right here. Nice little earnings call and probably just another in a series of lower highs. But people do like gambling. So maybe DraftKings is going to do great. But yeah, we did it, guys. We did it! Yay! We did it! Made it through all the assets. Gold is rallying. It's going to the moon. Look at that wick. Hell yeah, they were wrong about gold. You're not going to shake me out of my bars. Yeah, I don't know, guys. Do you think this is a prequel of what's about to happen in the traditional markets tomorrow? That was a pretty heavy sell-off on gold and a pretty heavy rejection. Well, not that hard of a rejection on crypto. And a lot of times when we see a gold sell-off and a crypto rejection and strengthening dollar the night before on a Sunday, a lot of times we will see the opposite or the dump happen on stocks on a Monday. So we'll see. Maybe not. I mean, stocks are just we're just floating up. Floating up. Mayo hands. Yeah. I like the pillow hands, but mayo hands works too. More like Vaseline hands. Mom, don't come down here. Oh my God, Mom. You could stay. Fucking weirdos. All right, I'm about to call it there, guys. Hope you enjoyed the stream today. Looking forward to busting that new indicator out for the group. Hope you guys like the preview. I just got a couple more things I want to work out on it, but I think overall it's pretty much good at this point in time. So I will be releasing that to everyone this week and doing a little fine tuning. You guys can try it out, both versions of it, and let me know what you think. And yeah, with that, we're going to jet out of here. If you are new to the channel, make sure you like and subscribe, share with your friends. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And of course, like always, we'll be doing our stream on Wednesday night from roughly 8 p.m. Eastern Standard Time till 10 or 11, depending on how much, how caught up I get or how much rants I go on. But yeah, roughly every Wednesday, every Sunday from 8 to 10 or 8 to 11. We do these streams. Make sure you check them out. If you're interested in the trade group and are not in the trade group, you can, of course, reach out to me. And there's always room for people that want to learn and make money. Yeah, let's do it for today. Crypto Trend Trader. Appreciate y'all tuning in. Make sure you like and subscribe. And I'm out of here.